you have to realize that there's no guarantee that price will get to whatever level you want it to go to. There's absolutely no guarantee, but there are simple ways you can just look for the low-hanging fruit objective, areas that price can easily smash into. How do you find those areas? You can go from data from this low, overall low here. And if you start measuring from this overall low, you can basically see that from this overall low here, right here to this high, we delivered 17%. So if I'm looking for a buy under here, I'll be targeting my take profit. My first take profit position will be around 50% of this 70%, which is 8.5. And you can see if you took a trade and you aimed for 8.5, you can see that even though 8.5 was around here, your take profit would have been smashed, even though you were sleeping. It would have been smashed. What you want is an area that price can easily smash to take profit. Now, it ended up going 20%, but it isn't a guarantee that will hit 20%. But after that, look what happened again. Let's say you got into a buy after this retracement and you aimed for 10%. Price rallied to 36%. So if you had your take profit at 10%, it would have smashed it and rallied way beyond your take profit. Now, I know you must be wondering, why not catch the entire move? You can't. You're not even meant to be looking to catch the entire move. You just want to catch the best move that will give you profit, that will be sufficient for you to pretty much take care of yourself, take care of your bills for the month. And next month, you're looking for another one trade. Now, this is 36%. And after that, if you're getting into a trade from this retracement, you can aim for 18%. 18% is around here. Around here is 18%. Can you see that if your take profit was here, price would have smashed your take profit and literally rallied to 31%. Now we saw a retracement. After this retracement, you can aim for 15%. 15% is around here. And you can see that your take profit would have been smashed. Price rallied and rallied up to 22%. Now, let's say you got into a buy from here. You aim for 50% of 22%, which is 11%. If you aim for 11%, right here, you're already out of the trade. And you could have literally, your take profit would have literally been hit right here. And price coming down here, you still look for another entry because you know we're still going to rally to the upside. Now, overall, we're looking for this overall move from this low to this high is 22%. Now, overall, price delivered from this low to this high, price delivered 28%. So coming down here, if we're looking for a buy right here, what percentage are we going to be looking for to get out? Does any of you know what percentage we'll be looking for to get out?
Just 14%.
Exactly, 14%. So let's say we get in here, price hit 14%. Around here is 14%. You close the position, put your take profit right there. We'll have a fair value gap in there, extreme premium zone. Put your take profit at that 14%, get out. Even though we're still anticipating for a continuation to the upside, but it isn't a guarantee that price will continue higher. Price can still hit this fair value gap here and have a deep retracement. And that will even give you more opportunity for you to look for another re-entry because you are bullish and you know we're still going to hit that all-time high and you look for another re-entry to get in. This is basically how you can use quantitative analysis to still find your low-hanging fruit objectives. Does that make sense, guys?